Reserve Bank Board is set to meet next week to make an interest rate decision on Melbourne Cup Day, after it was revealed this week that inflation has fallen to a 3-year low. Joining me live to discuss is KPMG Chief Economist, Dr. Rynne. Brendan, thanks for joining me. What can we expect when the board meets next week?
Oh, look, we still expect the Reserve Bank to make no cuts. I think we'll just see them maintain the current cash rate of 4.35%. I think the latest inflation data showed good movement and good trends downwards, but we also recognise that much of the decline that we saw in the CPI was because of the cuts in, or the rebates that have been provided in electricity prices and also cost of living relief. And that's really muddied the waters with regards to getting a better understanding of what the true price pressure is within the Australian economy. But nonetheless, we did see a fall within the trim mean or core inflation down to 3.5%. So that's still above the target band of between 2 to 3. So I still think that we're some way away before the Reserve Bank cuts the cash rate.
Do you think this week's figures would have moved the needle at all? Would it change the conversations inside that boardroom next week?
Look, I think what it'll change is the conversation to say that the trajectory of the falls in inflation is now starting to accelerate, and probably accelerate faster than what the Reserve Bank thought was going to be the case. So we're now likely to see headline inflation and core inflation below what the Reserve Bank had forecast in its last statement of monetary policy that was released in August. But a new statement of monetary policy is going to be released next week. So I suspect that there will be a rebasing of those forecasts going forward. In particular, what was really instructive this week was the release of the monthly CPI figure that showed that in September, headline inflation was now down to low 2%. And again, that's largely been as a consequence of the rebates that have been provided by the Commonwealth and state governments in electricity pricing. But what I suspect we'll see is that acceleration in disinflation will continue for the rest of the year. But the Reserve Bank will want to see core inflation well within the top of the 3% band by the time it wants to start to move the cash rate. Now, KPMG's forecast is that it's not likely to move the cash rate until about February of next year.